Welcome. So we are doing property management training today. And when I say property management training, I'm going to tell you how to hire a third-party property management company. Depending on how long this takes, I may even talk to you about how to take over your own property and do your own property management as well. Or I may do that on a separate clip. But let's get into it. So I'm going to start with how to hire a third-party property management company. And if you've got questions, post them below. I may not be able to answer them while I'm going live here, but I should be able to answer them once I'm done, and I'll just go in and answer them later for you. So let's get into it. Now, here's a script. You probably want to screenshot this, but you want to do a version of this, not exactly like this, obviously. But when you call that third-party property management company, you want to say, I'm coming into town. I would like to meet with you, find out, about your business. Tell me a little about your company. What size assets do you manage? We buy value add A, B, and C assets in A and B areas typically. And here's the size we like to buy. And can you give me your thoughts about investing in this particular market? And are there any areas that are easier to manage than others inside your market? Are any of them gentrifying? Are there any major employers moving in and out? And I'm going to tell you this. We learn more from interviewing our third-party property management companies than about anything else that we do. So once we're done with this, I'll tell you how you can get this book, How to Hire a Third-Party Property Management Company. Because I'll tell you, it's got every possible question you can think of to ask. And like I said, we learn more from hiring our third-party property management companies when we interview them than just about anything else that we do. So sorry about the camera jerking there for a second. They're repositioning because I'm going live on several channels at the same time here right now. Okay, so that was a script. Now, here's what's really important, okay? And a lot of newbies screw up on this. Because a property management company can make or break you. Now, depending on what asset class property you buy, A, B, C, and D. Now, hopefully that makes sense. D would be the lowest grade. A would be brand new stuff. You want to make sure that that property management company manages that asset class, okay? I'll give you an example of this. We had a 403 unit asset in Louisiana, and we had a management company come in that had never managed a C asset before, and they died. I mean, they killed us on it. They got the revenue was about $100,000 a month, and I had to literally go live there for 3 months, and we sold it a few months ago, and I had gotten the revenue up to almost $300,000 a month. But they had crashed and burned because they didn't know how to manage a C asset. They'd done A and B assets. And the same thing is reversed. If you have a really nice asset and you give it to a manager, like an A, and you give it to a management company that's never managed an A asset, they've only managed C assets, they're going to crash and burn. So it's very important that they manage the same asset class. That's number one. Number two, they need to manage the same size assets, okay? So size is super important. If they, I used to managing 100-unit assets, 100-unit complexes, and you give them a 20-unit, forget it, they're going to crash and burn. And vice versa. If they're used to managing smaller properties, 10, 20, 30 units, you give them 100 units, crash and burn. So it's critical that they manage the same size and asset class already. Otherwise, you're going to have a problem right out of the gate. Now, you want to make sure they either have an office or that their regional manager lives very close to that asset, okay? That's super important. You also want to make sure they don't own have an ownership interest in any competing properties, because that's a conflict of interest. If they've got a vacancy, which asset are they going to send people to first? So that's super important. Now, there are a few exceptions to this, but for the most part, that's very important. All right, we already talked about same size, and we talked about size and asset class. All right. Now, once you hire them, they can also help you with the due diligence. Like, we have an asset under contract right now in Nashville, Tennessee. And by the way, if you're a accredited investor, you should check that out because there's still some slots left and it is a screaming deal. But we had our management company that we're bringing in, they brought in teams to help us walk every unit. Now, we brought a lot of our investors there, and our GP partners were all there, and we all walked. There were teams of about 5 to 8 people walking units. And we walked them all. But a management company will help you with that. They'll set that up. They had software that they were using that takes pictures of the units. They rate the different types of the different things in the units, like the age of the appliances, the floors, the walls, the paint, the window coverings, all of that. It all gets rated. Pictures are taken. And they'll help you with all that. Now, you want to mystery shop them though, okay? You need to go to units that they're already managing and see how good a job they do. Do the people jump out of their desk when you come in to mystery shop a unit? I would suggest you have them help you through the rental process and see how professional they are. What a management company will help you do is determine the market rents. They'll of course help you with rent collections. They'll evict and do move outs of people that don't pay the rents. They'll have a lease that they like to use. I would ask you to have them show it to you. And remember, when I give you this book at the end of this thing, don't let me forget, team, to give that to them. When I give that to you, it's got every possible question you can think of. But they'll typically make your payments and pay your expenses. They'll provide financial reports. I'll tell you what to ask them or what you should expect from them in just a minute here. But they'll do all of this, okay? They'll write the leases. They'll find your tenants. They'll do your marketing. And that's a great question to ask them. What's the best place to market my units in this particular market? Because it's different in different markets. Some places, believe it or not, it's Craigslist. A lot of places it's apartments.com. It can be Zillow, it can be Zumper. So you need to find out what the best place to market your asset is in whatever market you're going to be buying in, right? All right. Now, when you hire a management company, you want to set a maximum threshold that they're allowed to spend if something comes up, a maintenance issue. If anything under that threshold, they can just go get it done. But if it's over that threshold, they need to contact you. And ideally in writing, they should send you an email, okay? Now, they should also, you should stay in regular communication with your property management company. Once you buy an asset and hand it off to a management company, it's not like, whoa, I'm done. No, not at all. You are asset managing at that point, okay? And that's something that you're going to have to do. You're going to be managing the management company. Like on assets that we buy, we charge, 2% of the gross collected rent on a monthly basis for our asset management. So we can go fly there, check it out, manage the due diligence process. Manage the CapEx project when we're doing the renovations, things like that. And so you can charge to do that if you're raising money for your deals. Okay? So I'm going to tell you, if it is a larger property, like over 80 doors, you better be a signer on the bank accounts. And here's why. If you ever decide to let that management company know, you need to swipe the money out of that account, because most management companies are allowed to hold on to the money until all the bills have gone through, and that can really screw you up if you've got a larger asset. So you need to be a signer on the account, so you have visibility on it. Super important. Now, if there's a large project that you're getting done, a big repair, you always insist on 3 bids. Okay, super important. Now, a lot of management companies charge a fee to lease a unit, especially on smaller properties, like under 20 doors. They'll have a leasing fee. I would encourage you not to have that. Why? Because it's actually a conflict of interest, because they make more money if a unit turns over. You want to bonus them for renewals, not for new leases, okay? And you want to bonus them for exceeding net revenue. I'm going to tell you, we did that on an asset we have in Beaver Creek, Ohio, where they could make more money on their management fee if they exceeded an NOI number, net operating income number for us. So that's you want to bonus them and incentivize them for things that help you, right? And the biggest expense in multifamily ownership is tenant turnover. That's the highest expense you're going to have. And so you want to minimize that. So again, that's why you bonus for renewals, not for new leases. All right, now you should absolutely do surprise visits. They don't like it, nobody likes it, but who cares? You want to see how that place looks when they're not expecting you, right? You want to see walk that complex, see how it looks. You want to walk units that are supposedly ready, see how they look, so on and so forth. Now, you should also get a list of payables at the end of the month, so you make sure nothing carries over, you're not pissing off any vendors. And you should look at your management fee charges, especially on larger assets, because some companies they'll upcharge you for every little thing. And so it's important for you to really be careful when you first read your management agreement, but pay attention to that, because sometimes those charges will creep up. So it's really important for you to watch that as well. So these are some high-level tips. Now here's some questions, but again, I'll get you this book before we're done here. And you'll have every possible question I could think of and then some, okay? And so there's links in here and everything else. It's an incredible resource. I don't think there's a better one out there about hiring a property management company. All right, but some of the questions are, when they rent a property, what's the procedure, okay? For example, like I was mentioning previously, I want to see them verbally tell a tenant what they expect, or you as an owner would expect, and then what from them, and then what they can expect from you. For example, pay your rent on time, don't bother your neighbors, keep your place clean, and that's what you're going to expect from them. If they have a legitimate maintenance request, by God, you're going to be all over it and get it done, because tenant turnovers, again, is your highest expense. You want to take care of them, right? How do they advertise? Remember we talked about that. You need to know that. What's their average turnaround time? That's huge, because if they take 2 weeks to turn around a unit where another company can do it in a couple of days, you lose a lot of money to your net income. So you want to ask them that question and hold them to it, okay? All right. Now, screening tenants, we talked about this, the verbal component. I really believe in the verbal component. Again, I've owned thousands of units, 2,000 houses I rented long-term, and thousands of apartment units, and I've always found that personal interview makes such a big difference, like I just described. I got ahead of myself a little bit. How do they screen? Do they do an eviction check? Do they do a criminal check? If there's anything on the criminal check, what do they allow, what don't they allow? Do they have a standard lease agreement? Who did it? Who wrote it? When was the last time it was written? Hopefully it was an attorney that wrote it, right? Now what you'll find is leases change over time. And when you're doing, and I just did a clip on due diligence. If you go on my Facebook page, you'll see it. It's still there. I just did it a few days ago. And in the due diligence process, you're going to do a lease audit, and you're going to take a look at all the leases. And very often you'll see leases change, because what will happen is they'll get their butt kicked. Property management company will get their butt kicked in court when they're in eviction court because a clause is off or a clause is wrong. So they modify it, and then they fix it, and then they move on. And again, this is one of those ask me how I know things, because I did it myself as well. So when was it last updated? Very important. Did an attorney write it? And again, do they explain the lease verbally to the tenant at lease up? What's expected? And again, I would highly recommend that they do. And some don't, okay? They just want to, hey, here, sign this, move on. But it's always a better experience if it's verbal, because you can say, remember when we talked about that? And you said, yes, you would agree to that? And you've got them. You hold their feet to the fire. Now, maintenance and repairs. I'm going to talk to you about maintenance and repairs with a property management company. This is a big one, especially if you have a smaller asset. If you've got a smaller asset, like I would say under 40 doors, you are absolutely going to rely on the property management company's maintenance infrastructure, okay? Their employees or their subcontractors. And I'm going to tell you, some of those smaller management companies that manage smaller assets, maintenance is a real profit center for them. So you want to dig into it. How do they charge for the different things? Because they'll hire some kid at 15, 18 bucks an hour and bill them out at 100. And you don't want to get screwed. So it's really important that you ask about that. And then you want to find out how they deal with different things. If there's an issue, a maintenance issue, how do they contact the owner for authorization? Again, I would encourage you that it's in writing by email, okay? Who do they use to complete those repairs? Are they licensed? Smaller companies may not check that. Are they insured? Super important. Larger companies always do that. There's a whole approval process for a vendor before they'll allow them to go to a property. Smaller companies, not so much, and you need to look into that. Because here, let me tell you a definition of a bad day. They have somebody come out to work on something roof level, and that person falls and hurts themselves. Guess who's getting sued? It's not just the management company. You as the owner are getting sued. This isn't ask me how I know. This happened to me, okay? Super important that you make sure that they're licensed and insured, okay? Super important, okay? Now, is the maintenance staff employed by their company? Remember, I just talked about this. What's their markup? You need to know this stuff so you don't get screwed. Okay, how about subcontractors? Do they upcharge the subcontractors? Super important. So, find out what the hourly rates are. Are they reasonable? Are they ridiculous? How often do they inspect? Super important. I'll give you a great example of this. We did a fire inspection at our asset in San Antonio, 296 units. I'll tell you the positive here. Now, we were doing a fire inspection, check on fire extinguishers, seeing what the expiration dates were, batteries in the smoke detectors, stuff like that. Our manager took it upon herself to do that. Big job. But she discovered 60 residents that had pets that they weren't paying for the pets. That's just measly 20 bucks a month. But she's like, hey, you got to pay for that cat or that dog. That's how it works here. 20 bucks a month. Do you know what that resulted in for us? That was a $400,000 instant increase in value because that money goes right to the bottom line. So inspections can be positive and negative, but they need to inspect. If there's a leak that's not being reported under a sink, it's going to destroy things. Super important. And again, how do they handle an emergency repair? I would tell you that if it's water running big time, tell them to just fix it. But especially if it's in like the middle of the night. But otherwise, you have that maintenance limit where they're going to contact you if it's over a certain amount of money, right? Okay. What are their procedures regarding rent collection? And what's their eviction process like? How do they start it? When does the tenant get a late notice? When do they start the eviction? How long do they wait? Very important. Do they take partial payments? I would encourage you to tell them not to. It just multiplies and they never catch up. And then when do they do rent surveys and stay on top of rent increases in the marketplace? They absolutely should. And smaller companies don't, but the larger companies all do. But they need to do rent surveys on a quarterly basis, really, and see what's going on with rents. So rents can be adjusted as units turn. Okay. So here's reporting. This is what you should expect from your property management company. Again, if you've got any questions, post them in there. I can't get to them right now because I've got the phones pointed this way so I can't see them. But I will go in afterwards, I promise, and I'll do my best to answer them today. All right, so reporting. How regularly do they report to you on collections and on other things that are important? Are you going to get monthly or quarterly statements? I would encourage them to be monthly, right? How often are you talking to them? If it's a larger asset, by God, it better be weekly. We have standing weekly calls on every one of our assets. We want to know what's going on. We look at our KPIs, key performance indicators. What are collections like? What are late fees like? What are how long are the maintenance work orders been open? How many are open? What else? Renewals. What do those look like? We've got renewals coming up. You should be 3 months in advance, and they should be working those people that are to get them renewed so they don't, stay in lease and they don't leave. And so, what percentage of the renewals next month have been handled? These are KPIs, and that should be a weekly call. How do you communicate with them? In my opinion, it should be a Zoom or a Google Teams meeting. It should be video with Zoom now. It shouldn't be phone, email, anything else. It should be in person like that, online, on Zoom or on Google Hangouts or whatever it is. I'm never good with that one. We use Zoom. All right. So these are the reports that you should get on a monthly basis. Of course, you should have an income and expense statement. It could be the same thing, a P&L. This can be combined, but you need that, obviously. That's huge. You got to have a current rent roll. You need a list of vacancy. You need a list of delinquencies. You need, there should be a budget, especially if it's a larger asset. There should be a budget created. And you should have a narrative of what's happening. Now, I call this an exception report or an anomaly report. If there's anything unusual that happened, by God, they better be in writing and they better tell you what it is in advance of your meeting with them, okay? The last thing that's missing here is renewals. I need to add that to this slide. But there should be renewals on here. What's going on with those, like we just talked about? Like I said, they should be doing a quarterly market survey to see what's going on with rents in that marketplace. So hope this is helping, guys. Okay, now let's talk about, since I'm kicking ass here on times, I'm going to talk about taking over a property yourself. Now, I told you I'd tell you how to hire a third-party property management. Hey, Matt, can we put this in Rod's links? It is in Rod's links. Okay, go to rodslinks.com and go to the free books, and this book is there. And I'm telling you, it is an incredible resource you should print and use. It really is. I'm really proud of this product. Okay, so that's how you get that. Now we'll talk about how to take it over yourself. And a lot of people start this way. It's brain damage. I'm just going to tell you that because there's a lot to it. But, it's it's trial by fire if you want to learn how to do it. So, after you close, there's a lot of things you need to do right away. Your tenants are going to be scared. They're going to be like, oh, shit, rent's going up. What are we going to do? So on and so forth. So you want to do everything you can to mitigate that fear as quickly as possible. And I would tell you, the first thing I would do is start making some improvements, exterior improvements, so they can see you're going to fix things, right? So, maybe paint some things, put in some new landscaping. They see that you're fixing stuff. That's always a good sign. But as soon as you take over, you've got to notify them that you're, the new sheriff in town. You're there to help them and take care of them. So you're going to send a letter. You could do this electronically, or you can do this and put a letter on their door, but you want to update everything. Okay, you want to know who they are, their name, phone number, how many people are living in the property, and what their phone number is, where they work, and tell them how to pay rent, where they can pay rent, where they can mail it, or how they can do ACH or whatever. Never take cash, ever, never, ever, ever take cash. And what they do if there's a problem, maintenance, if there's an emergency, if there's a problem, they need to know that right out of the gate. And so you need to make sure that you're ready to give this to them as soon as you take over that property. Okay, now, like I said, in the letter, it should include a way for them to update all of their information. Some people change jobs and phone numbers like we change socks. So you need to know that, right? Now, again, you could do this update in paper. You could do it on a link on a website. You could do it with an email address. Websites are so cheap, you can have somebody fill up, a tech person do a form for you for them to fill out. But they need to have a way to do this and do it quickly. And you make sure that every one of them does this. And they should, again, update who they are, who all's living there, their names, ages, and relationships, all the contact information for everybody there. And again, the current employment information, including an employer phone number, everything. All of that needs to be updated. Super important, okay? All right. Now, you also need to notify the utility companies. You want to know a huge newbie mistake is someone will buy an asset and they'll forget to do that. And all of a sudden, the tenants are calling saying, hey, they turned off the power or they turned off the water. That's the definition of a bad day. Okay, so you make sure that you notify the utility companies before closing, right? Before closing. You also should contact the local fire and police departments. Why? Because you want to have a relationship with them. They need your contact information. You should also have asked, before you bought, what's going on. You should ask the non-emergency police number, what's going on at this asset? What sorts of problems have you had? Ask the fire department what sort of access information they need. Is there a gate? Do they need access to the gate? Whatever. Okay, so and give them you and your property manager's contact information. Super important. Okay. Now you need to evaluate any contracts that are on that property for pest control, landscaping, pool, laundry. Now, very often laundry stays with the property, even if the property sells. Those contracts survive a sale. But you want to put all of these things out to bid for swimming, for parking lot for pool, for parking lot maintenance, landscaping, HVAC, if there's a regular HVAC company, plumbers, electricians, pest control, vending machine, all that stuff should be put out to bid, because what happens with vendors is there's something called vendor creep, where the price just goes up year by year by year. And so honestly, these things should these things should all be put out to bid annually, okay? Super important. So you're going to do all that, contact them. Now, you should have a property-specific checking account for this property. Unless, it's just like a duplex or something, then I used to have, I don't know, upwards of 30 single-family houses or more in a particular entity, in a particular bank account. But commercial multifamily should be in its own LLC, should have its own bank account. And now here's another big one. Always make sure your personal expenses are separate from the property's checking account, okay? Don't commingle that money, especially if you have partners. You're asking for a lawsuit if you have partners and you mix that. But you shouldn't mix it ever, okay? Just don't do it. Because what will happen, if you mix your personal finances with your business and you have a liability issue on that property, they will do what's called, even if you own it in LLC, they'll do what's called piercing the corporate veil. They will try to get to you personally. And if you have treated your money like a piggy bank in this bank account, then they can win, okay? And I got sued for this once myself. It was a sexual harassment claim, not against me. It was this woman that was cleaning houses and a maintenance man supposedly harassed her. It was bullshit, but it cost me 20 grand to win it. But they tried to pierce the corporate veil. So just keep that in mind. Do not commingle money. All right. Now, you've got to set up an accounting system. You've got to decide if you're going to do cash or accrual accounting. I like cash, but most large companies do accrual. I like cash. I like to know exactly how much came in, how much went out, and I don't want to sit and try to think about, extending that out on the accrual process. But you're going to talk to an accountant upon acquisition. You're going to set all that up, right? And you want to make sure you classify your expenses and your capital expenditures the right way. You know, if you're doing capital expenditure type stuff like new roofs, you can't expense them. You got to, you know, they're a capital improvement, and that's obviously handled differently tax-wise. But guys, we love this business because of the tax benefits, okay? So, you know, it's incredible. You've got to decide how you're going to do the depreciation and if you're going to do cost segregation. This is the last year for bonus depreciation on cost segregation. And so if you're accredited and you haven't checked out our Nashville deal, text the word partner to 72345 or go to creecapital.com. Can you put that in the comments? It's in Rod's links there too. There's actually a webinar coming up on this Monday night if you want to watch us do a live webinar on this Nashville asset. It's a screaming deal. I mean, we've got 60% loan to value, so we're only borrowing 60 cents on the dollar, and we still have upwards of 10% cash on cash return projected, 16 to 19% internal rate of return, 20 to 22% annual average return. I mean, it's a screaming deal for that conservative of debt. Low interest, fixed interest rate for 10 years. I mean, it's a screaming deal. So if you're accredited, you should check it out. You know, if you've got any liquidity that's getting killed by inflation. So again, go to CRE Capital or go to Rod's links, creecapital.com, or you can go to Rod's links and it's there, or you can text partner to 72345. But this is the last year for bonus depreciation, and this property will qualify for that, and we're cost segregating. What is cost segregation? Cost segregation, you know, there's typically 20-year straight line depreciation where you can depreciate a real estate asset and take write-offs. Well, cost segregation massively ramps that, okay? And if you invest $100,000 in this Nashville asset, you'll likely get about a $70,000 write-off right out of the gate this year because of bonus depreciation and cost segregation. So it's just a screaming deal. Unfortunately, they're taking it away after this year or minimizing it. But all right, you may want to implement a PO system. I'm not going to belabor this because this is really for a larger situation, so we're not going to waste time on that. Okay, now, but you're going to have to create management systems, okay? Systems around rent collections. How are you going to handle late payments? How are you going to handle maintenance? Who's doing it? How fast you're going to do it? Who, you know, so on and so forth. How are you going to inspect and do regular upkeep, maintenance, and inspections? So you're going to have systems around this. You're going to have systems for marketing, okay? I wouldn't worry about purchase order right now, but you're going to have a lease-up procedure. You're going to have accounting procedures, how you're going to handle all this stuff, which is why this is a big nut to take on your first deal. Now, if you're just going to do a duplex or something, you'll learn and you'll fumble through it. But if you're going to buy a 20 unit, you need all of this stuff, okay? So I'm going to tell you, let me just say this to you. Even if you have a duplex, someone should be getting a little bit of a break on the rent to keep an eye on things, okay? Even a duplex, to maybe you have them mow the yard, but definitely pick up the trash, let you know if there's anything going on in the neighborhood or with the other units, okay? So someone should do that. Now, when you manage, it does not mean you're out there fixing toilets or leasing properties. You can also have a person on site do that if you've got a small asset. You know, self-management means you don't hire maybe an off-site management company, but you could absolutely hire your own personnel right on staff, give them a break on the rent, or give them a couple of bucks to do it for you. And that's what I would recommend you do. Now, I'll tell you a little ninja trick here. If you've got 20 units or more, I'm going to tell you the ideal management scenario, okay? If you can find an old retired couple where the guy used to be in the trades of some sort, plumbing, electrician, drywall, painter, roofer, whatever, you know they can fix anything, right? The old guy's retired, but he can fix anything. You know what I'm talking about. And then the wife is that woman that is in everybody's business, and she's at the freaking window doing this, checking out what everybody's doing. If you can give them free rent to handle a property, oh my God, you're gonna be so happy because they do a fantastic job. But you know, you can bring on an on-site manager. It depends on the size of the property. They can be full-time, they can be part-time. You know, they can just get a rent discount. Maybe they get free rent, nothing else, or maybe they get free rent and some compensation, depending upon the size and the things that they're going to do. So there's a lot of subjectivity to this, but you can set this up any way you like. Now you can have some turnover here. That's why a retired couple is so great, because they're not going to give you a hard time. They'll do what they say they're going to do in most cases. Where some people might not, and you might go through one manager to get to another one, but But you still have to manage them. You're still asset managing, but they're doing the heavy lifting, okay? Now, I give you some rough rules of thumb here. Maybe you got a 12 unit and they get $200 or $300 off the rent to do some of the things. You know, a larger unit, maybe they get free rent, maybe they get bonuses for leasing or renewals. Like we talked about, a 40, 50 unit, maybe they get free rent, leasing bonuses, and a monthly salary. It just depends on, you know, and you negotiate this any way you want. If they're doing make-readies on units, maybe they do that. Maybe they mow the yard. Maybe they pick up the trash. All these things are going to come into play, okay? So you negotiate that. But they are basically the face of your property, okay? They're 24/7. They're there. They live there. They give you peace of mind that you know that if there's a drug problem, they're going to tell you about it. You know, if there's a, you know, neighborhood issue, they're going to tell you about it. They could show units. They could interact with residents, interact with contractors, let people in. You could even have a property phone that they answer to do showings. But again, you're going to have to manage them, but they can give you, you know, a life, right? So super important. All right. You know, they can deliver notices to tenants. You want to be careful with that one because that can create dissension if it's a negative notice. So that one be careful with. But they could post, at least post them on the door. But I wouldn't probably have them hand them to them, especially if it's late pay. But they'll keep things clean. The common areas, any common areas that keep clean, like laundry, hallways, things like that. They can, like I said, they can mow the grass, they can blow the snow, they can do make-readies on a property, minor maintenance, cleaning, paint. It's very common. I've had this many, many times, okay? But again, you got to manage them. Now, this is super important. You got to know the law, okay? Every state has different landlord-tenant laws. This is why I don't buy in blue states, okay? And this is not a political statement. It's a I don't want brain damage statement. You know, I'm going to tell you, you know, a lot of the blue states have rent control. They are not business friendly. They have much higher taxation, and they are not landlord friendly either. So, but you need to know the landlord-tenant laws wherever you are buying, okay? Super important, okay? And I'm going to tell you, some of those laws are not landlord friendly, and you need to know that. When I was in Tennessee, I had 200 houses in Tennessee at one time. I regret it every minute of it. They had these laws where you could file a bankruptcy and stop. I even got defensive. I crossed my arms. Do you see that? They had these landlord-tenant laws where you could stop a foreclosure by filing this, they called it a wage earner bankruptcy. It was just a Chapter 13 bankruptcy. But I had tenants that stayed in properties for a year or two without paying. It killed me, okay? And you need to know this stuff. So, you know, that was an ask me how I know thing, all right? So, anyway, you need to be aware of rent control if you have it, obviously, you know, what you can do and all that stuff. So, very important. Now, you also need to be aware of eviction laws. Some locations can take forever. Like I said, blue states can take forever sometimes to get a tenant out. So some of them had tenant rent moratoriums to the very recent past here, where most of the states had stopped them. They still had. These landlords are dying. They're losing their properties. Now, here's what you never do. You never, if they're not paying, you never turn off their electricity. You never turn off their water. You never change the locks. I've heard of people taking the front door off. You want to go to jail, you do that stuff, okay? Here's what you can do, though. I was at that Louisiana asset. I'll tell you a story. I was at that Louisiana asset, and there was a shooting, and it was 3 units that were involved. They were all related. And I was touring the property. I was there. I spent a lot of time there to turn this around. And I walked by this unit. The music is freaking blaring. And this was probably a stupid move, but I was so pissed off. I went up and I pounded on the door. And the guy came to the door. I said, turn the music down. I said, I'll give you $1,500 if you're out of here by tomorrow, cash. They took it. And then I went to the other 2 units. They took it. We had tenants running into the leasing office thanking us for getting these deadbeats out. So that was called cash for keys. Now, there are laws around that too, so be careful with that. But I didn't care in that case because they had to go. You need to know what constitutes discrimination. And some of these things may surprise you. And you want to be careful there because there are professional litigators that will bait you to try to sue you on some of this. So obviously, national origin, you can't discriminate for that. Sex, race or religion, age, familial status, no single mom, sexual orientation, maybe that surprised you. You can't discriminate for that. Disability, marital status, we don't want any spinsters, whatever. Source of income, none of this stuff you can discriminate for, okay? And you shouldn't anyway. But the point is, you need to know this and make sure that you're very, very careful with this. I had a friend that had this office warehouse in Miami, And, it's like a row of offices with big warehouses behind them. You've seen them. And this guy poked his head in one of these buildings and said, hey, can I use your bathroom? And the guy said, okay, no problem. And he got a lawsuit the next week because it wasn't a disabled bathroom. So there you go. There are professionals out there that sue for crap like this. Now here's how you can reject an application. The legal ways, okay? Maybe they don't make enough money. They've got negative references. They've got poor credit. They've got a criminal record. They lied on the application, or they didn't fill it all the way out. They can't afford it. Now, we won't let somebody rent a place from us unless they make 3 times what the rent is, okay? They have pets, and you don't allow pets, which I think is stupid, but I absolutely would not allow some of the big breeds of dogs. But cats and small dogs, why? You can charge pet rent, you can charge a pet deposit. Why wouldn't you let them have them? Okay, if they've got lawsuits from previous landlords or evictions, you may not want them, right? They've got a bad history. Those are the legal reasons you can reject an application. Here's the key. You need to treat everybody the same. You absolutely cannot discriminate. Just don't go there. So here are my high-level tenant rules, okay? I said this to you previously. Pay your rent on time. Keep the place clean and the surroundings clean, and don't disturb the other neighbors or break the law. That's all I ask, okay? And again, this should be verbal. This should be verbal, okay? Then, what they can expect from me, a safe place to live, a clean place to live. And if they give you a legitimate maintenance request, you're going to fix it like that. And then you're going to follow up to make sure they're happy with it. If it's just a broken blind, yeah, it may take a while. If they broke it, they're going to pay for it. But legitimate maintenance requests, you are all over. So that's real simplistic, but this is how you should run your organization, okay? So here's some more self-management tips. You never take a check for the first payment. It is always certified funds, okay? Money order or cashier's check. You only give the keys when everything's done to the property, the lease is signed, you've got a condition report done that they sign off on, noting any damage, and it's all certified money. That's the only time they get the keys. Remember, tenant turnover is your biggest expense. Take care of them. If they've got legitimate maintenance requests, fix it right away. But if they cause the damage, you bill them right away. You make them pay it. But you take care of them. You treat them like somebody that you care about. I've brought big buckets of popcorn to my residents. We do, this San Antonio asset. We've done a Christmas party with free cakes. We've got a food truck going there this week. We're going to have a Meals on Us food truck at the 5 o'clock at 5 to 7 for the residents. We've done ice cream parties. We brought an ice cream truck in, pool parties. So you take care of them. You make it feel like a community where they want to be there, right? Super powerful, okay? And that's how you really, maximize your net income on a property like this so you don't have turnover, okay? Is that it? That's everything. All right, so again, guys, by the way, I've got a boot camp October 15th and 16th. If you DM me on any social channel, you can come for $97. I don't sell anything there. We go deeper than this on this subject and every topic. It's 16 to 18 hours of training. It's virtual on October 15th and 16th, so weekend. If you pay a little more, you can buy the recordings as well. But here's the thing. There is a crash coming. It's already here. Everything's going on sale. There's going to be incredible opportunity. It could be the greatest transfer of wealth in our lifetime, but you got to get up to speed right now. So I don't care if you learn from me, but learn this business. If you're interested in this one, if you're interested in something else, a different asset class, go learn that. Buying businesses, doing stocks, go learn it right now so you can capitalize on what's coming, right? If you're interested in the boot camp, like I said, it's $97, 18 hours of training, 16 to 18 hours of training, nothing being sold. Just DM me and I'll get you the code. If you want to check it out, go to Rod's links and the boot camp website is there. Go to the bottom, you'll see hundreds of unsolicited testimonials, people raving about the event. I've never had a complaint about the event, and thousands of people have attended, other than the breaks are too short, because I do 15-minute breaks every couple of hours. Trust me, they're harder on me because I got to go eat, pee, everything else in 15 minutes. So, it's drinking through a fire hose. I'm going to tell you, the manual is that thick, okay? And so bring your A game if you want to learn this business, but there's incredible opportunity coming. So I hope I see you there. If you're an accredited investor, watch that webinar on that property in Nashville. It is a screaming deal, super conservative. Is that everything? Is that everything? Yep, that's it. They're nodding. Okay. Have a great weekend, guys. We'll see you later. Take care.